My next guest says the bull market is rolling on, and there's good reason for that to continue. Joining me now, Andrew Slimmon, Senior Portfolio Manager at Morgan Stanley Investment Management. Andrew, the first thing you say is that you worry about the bubble in the non-profitable tech stocks. I thought that was the difference this time versus 1999. There aren't that many non-profitable high flyers. I mean, they're profitable, most of them, aren't they? Are they just rich in valuation?
Well, you chose the, hey Joe, you chose the peak of the internet bubble in 1999. I don't think it's comparison. The move up in the nonprofit tech stocks in that era was 400%. The move up now is like 100%. So we're on our way, but I think it's too premature to say this is 1999. But to be clear, that is the number one thing that worries me. I am worried about the speculative stocks are leading the charge. Look, today they're up again strong, and that's a warning sign. So I love Friday when the market pulled back, they got hit. That to me extends the bull market cycle. The more money that goes into these stocks, the more it worries me the duration of the bull market.
But the Mag 7, they're all profitable, aren't they?
Correct.
Okay,
right.
so you're
we're not talking about those stocks, Joe. We're not talking about them.
And you're not talking about you're not talking about like large language. No. You're not talking about LLMs or private companies.
Quantum computing, nuclear stocks, flying cars, crypto. You name it. It's the losing. It's the speculative ones.
Speaking of flying cars, Cathie Wood was just on interviewing Jay Powell. I mean, I don't think she asked him about the flying taxis yet, but I thought that was interesting. So you like when you see a little deflation, I'm talking about in the bubble, you see the bubble deflate a little and you step right in. Is that it?
I think it's great. That's what we need. But because take a step back, Joe, on the positive side, if I said to Joe, don't overthink this. The Fed is cutting. That means monetary policy is friendly. And by the way, the one big beautiful bill, there's going to be a lot of tax savings next year. So fiscal policy is friendly too. Those are two very powerful things driving the market. Don't overthink it, right? The one thing that hangs out there is this kind of feeding frenzy in speculative stocks. But other than that, I think it's a very bullish backdrop.
And it is not, as far as sentiment goes, we are not overly bullish right now. It's not really a loved market yet.
It's amazing to me. It's amazing to me that's the case. And then, but the pushback, Joe, is people say, well, the market's expensive. And I say, well, what do you want? The market's in the fourth year of, it's moving into the fourth year of bull market. You got fiscal monetary policy friendly. Sentiment isn't too high. I mean, you can't have everything. Yeah, the market's a little rich. But other than that, I think there's some very strong reasons to remain optimistic, with the exception of these speculative stocks.
You know what we didn't used to hear? People talking about the OBBB, but you know what you haven't mentioned? It's not even in the notes anywhere. I don't see any word to begin with T, in fact. Why aren't you?
Tariffs.
Yeah. It's so first half of the year.
So first half of the year. But I think one of the things that people forget is that a lot of the tax benefits to corporations offset tariffs. So, look, my point of all this is we always try to expect, okay, what's the unknown that's going to happen? Well, the reality is we had an unknown, and look what happened. The froth came out of the market on Friday, and it started off that way today, and then you get Jerome Powell, talking about cutting rates, and right back to the speculative stock. So I know what the leadership is, but be wary when unknown things like a new tariff tweet comes along. That's what's going to get hit.